I cannot believe this year. First it was inflation, now it's recession. People are terrified and they don't know what's happening, but I've actually had a great year. Hey guys, Rosario here and welcome back to Modern Finance. I'm so excited to be back. I took a couple months off because I was taking care of my newborn son, and I'm glad to say I have never been happier in my life. It was such an incredible experience, and to be honest, I didn't miss YouTube at all. But I'm glad to be back, and I'm excited to talk to you guys about something really important, and that's how to make money in these crazy times. Now, if you're listening to the media and their drummed up reports, essentially what you're seeing is that everyone's losing money right now. There's absolutely no way to make money, and nobody saw this inflation coming, and nobody saw this recession coming, and essentially everyone who could have had a portfolio this year has lost money, and the S&P's down, Tesla's down, crypto's down. Essentially every type of stock and category is down on the year, except for maybe a few oil and gas and commodity stocks, although those have been losing ground in the last few weeks too. So if you listen to the media, everyone's down, but that's really just a media narrative, and it's actually not true at all. So I want to take a look at one particular example, and it's from someone's company who I've talked about a lot on this channel, and that's Dalio. Bridgewater Associates has a fund, and it has actually outperformed the S&P by almost 60% this year, and has had a positive 32% return year to date, and that's like, I don't know, 64% annualized. That's pretty incredible returns for this period of time where, according to the mainstream media, everyone has lost money. Let's take a look and see how Bridgewater has kind of come to this point. And if you're interested in learning how you can create a portfolio that can perform well in these confusing and volatile times, stay tuned. If we look at the top publicly held holdings of Bridgewater Associates, what we see is a complete 180-degree story from what we're seeing in this report, that this Bridgewater fund has gone up 32% year to date. Let me just show you and kind of give you some examples from their portfolio. These are Bridgewater's largest holdings, their top 6 holdings, and 3 of them are emerging markets funds. And I'll tell you, year to date, almost all emerging market funds are down at least as much as the S&P 500, so 20 to 30%. Procter & Gamble is slightly up year to date, I think about 8%. The S&P 500 is down a significant amount. Let's just take a look and see what it's down year to date. Over the last year, S&P 500 is down almost 12%. Yes, Alibaba is also down 43% over the past year. So these holdings are not performing great. So how did this fund get this 32% year-to-date return? Well, I'll let you in on a little secret. This fund that you see, this Bridgewater fund, has nothing to do with the fund that this Bloomberg article is talking about. The Bridgewater fund that is actually making all this money is the Pure Alpha 2 Macro Fund, and there's no way to actually look up the holdings of this, unfortunately, because Bridgewater does not make this fund's holdings public somehow, and I'm not totally sure how they do that. This article from Bloomberg represents the only information I could find on the internet about Bridgewater's Pure Alpha 2 fund, the fund that supposedly returned 32% this year. I couldn't find any information online about this fund and what investments are actually held within this fund. But the information that I found online about what Bridgewater is holding overall is not consistent with this return, because their top holdings have fallen substantially and nothing in their portfolio suggests that they would have had a 32% return year to date. So let's take a look at this article and see if there's anything that we can glean from it about how Bridgewater is actually making these returns. So from the article, we can see that the Alpha 2 fund advanced 4.8% last month, and it's returned 11.4% annualized. And I believe it started in 1991. So that is a decent return. And I believe there's only 2 years that the fund has been negative, and that is 2000 and 2020. So as I mentioned, we can see here that they posted this 32% return this year. And that's a little confusing because looking at Bridgewater's holdings, I'm assuming they have multiple funds, because this fund certainly performed a lot better than their other funds from what I can tell based on their holdings. Although understanding Ray Dalio's position on where to be in times of inflation and economic recession and continued stagflation, as we've seen and Ray Dalio has predicted over the last 12 to 18 months, especially since his book came out, I think it's really obvious that Ray Dalio and the people at Bridgewater knew what was about to happen and were able to make good investments into technologies and companies, maybe not technologies, but into investments that were able to weather this storm and actually perform during these periods of increasing inflation. I am not totally sure what these investments are, but I'm going to keep digging. Let's just continue reading this article and see if there's any additional information that we can glean from it. So obviously the firm was funded by Ray Dalio, and there's been several years of struggle for this fund, apparently. They had a return of only 8% in 2021, which is well below the market average, but still a positive return. So even though Ray Dalio was preparing for this stagflationary recession that came after the boom of 2021, he was still able to eke out an 8% return, which looks pretty bad compared to the S&P 500. But if you're averaging it out over last year and this year, and you're looking at and also incorporating what happened to the S&P, this 8% and 32% return seems pretty good. That averages out to what, like 20% year over year? That's better than the S&P over the last 2 years, so that's great. So it says that macro funds, so that's really what Bridgewater is and how Ray Dalio invests. So he's a global macroeconomic investor. And he said that macro funds are flourishing as central banks raise interest rates to combat surging inflation. And this has been exacerbated by soaring energy prices. Bridgewater has made money in 65% of the markets in which it trades, with winning bets on interest rates, stocks, commodities, sovereign and corporate credit, and developed market currencies, among others. So I think this is the key part of the article right here. Winning bets on interest rates, stocks, commodities, sovereign and corporate credit, and developed market currencies. I think Dalio and Bridgewater knew what was coming in terms of the devaluation of the dollar leading to inflation and the huge amount of money printing that we had in 2020 and 2021 that would eventually lead to inflation and an economic slowdown and force the Federal Reserve's hand at raising interest rates. And I think Dalio also knew that this would lead to a downturn in stocks, especially because the markets did not price in these higher interest rates. And obviously a devaluing of debt in a lot of countries, including internationally. It's pretty clear that since the invasion of Ukraine by Russia, commodities have been skyrocketing. And since oil hit $0 or negative prices back in 2020, it has been on a rocket ship ride. And it has only recently come off. And I think that understanding how commodities perform in inflationary environments as a hedge against inflation, I think we can see that Bridgewater was able to foresee that in high inflationary environments, commodities can perform well. Now, the question that I have, and that you probably have as well, is are these returns going to continue into the second half of 2022? Are we done with inflation, and are macro funds going to continue to return these outsized returns compared to the S&P 500? Well, I think the answer to that really lies in what happens at the level of the Federal Reserve with inflation. So if inflation keeps rising and supply shortages still keep happening and people keep spending money, then the Fed will have no choice but to continue hiking interest rates. And I think that is a really good sign if you want to continue investing in commodities and if you want to dump debt and stay out of the bond market. But right now, the market is saying the opposite. The market is saying that the 10-year Treasury is coming off. So that means the market is not pricing in any further increases in the Federal Reserve's Fed funds rate beyond 3.5%. And I think this might be a little short-sighted. I think inflation is not done. I think it's going to keep going up, but we'll have to wait and see. The latest inflation readings are coming out in a couple of days. So we will see who's right, and we'll see if Dalio's fund, well, I guess it's not technically his fund anymore, but if Bridgewater's fund continues to outperform for the remainder of 2022. Let's see if it can get a 64% return year on year. That would be incredible. So in summary, it seems like Dalio and Bridgewater were able to predict the rise in the US dollar based on their raising interest rates before the rest of the world, and also essentially the collapse of bond markets, the bubble that we've seen in bond markets and the bubble that we've seen in the larger stock market. And they were also able to see that in high inflationary times, we have periods of increases in prices in commodities as people flee weakened currencies and asset markets for harder assets like commodities like oil and gold and copper. Now, we've already seen these commodities start to come off. So I don't know if these will be great trades for the rest of the year, but if you have a crystal ball and you're looking into the future, what do you think is going to happen? Do you think that inflation is cooling off? Do you see prices coming down? Do you see people able to spend less money right now? Or do you see inflation continuing to soar? Do you see a stagflationary recession? And do you see oil prices and commodity prices continuing to rise? To be honest, this is what I'm thinking is going to happen. I think that the Fed cannot cut rates right now. I think that the Fed needs to continue raising rates at least for the rest of the year, and we could see a terminal rate of anywhere between 4 and 5%. In the past, the Fed has had to raise rates beyond the level of inflation, and inflation could come in at 8.8% at the next reading. That's crazy. It seems to me like inflation is still accelerating, and it's really unlikely that we're going to be able to get out of this essentially unscathed. I think that there's a big recession coming, and that's why I sold my house. I see housing prices coming down right now. I see weak demand in housing, and I would like to have cash when I see the market starting to make a turnaround so I can purchase more stocks and a new house. But let me know what you guys think down in the comments below. Is crypto going to come back first? Are stocks going to rebound? Have we seen the peak of inflation? Or is this just the beginning? I'm excited to see what comes in the future. I know that the best thing to do during a stagflationary recession is to actually have cash available so that you can invest and find deals when those deals come about. And that's what I've taken steps to do. So we'll see if that strategy plays out, and I'll let everyone know what I do over the next coming weeks and months. And if you want to follow along with all the trades that I make, you can sign up for my Patreon, which is linked in the description down below. And I'll cover every single trade that I make, how those trades perform, and you can ask me questions about what you're investing in. And, I won't provide investment advice, but I'll let you know what I'm doing, and you can see if it makes sense for your portfolio. For now, everyone, that's all. We'll talk to you all in the next one. Peace.